Mr. Hall, thank you for coming here and then making us a great time. So let us jump into the questions. Could you explain BlackRock's current investment scale, which is, could you specify that into asset classes, which is bonds, equities, or alternative assets? How do you put money into where?
At the moment, our overall assets under management as at the end of September 2014 was somewhere in the region of $4.5 trillion worldwide. Around 2.5 trillion of that was within equities. Around 1.8 trillion of that was within fixed income strategies, and the remainder, a considerable remainder, was in alternative strategies. 113 billion US dollars in alternatives at the moment, with the remainder in cash.
Okay, yeah, I was going to ask about the biggest BlackRock, and then you just answered that. So there must be a lot of strategies going on, and then a lot of science is also putting into the investment decision. And so let us move into the BlackRock's view about the global economy and the market. What is BlackRock's prospect on global capital market? So there was a telling that going on that there's going to be a great rotation going on, which the money goes into equity from bonds. But contrary to that, there was reverse rotation, which the money went into bonds instead of equity. So do you think that that's actually happened? And if so, then could you tell us the trend is going on, or do you think it's going on?
Okay, I mean, let me take that in a few parts. I think, first of all, I mean, the notion of the great rotation, it was a very compelling story for a number of broker firms to persuade clients to buy more equities. I think the case for equities is still very favorable in an era of very low rates, low interest rates, as we know. Corporate growth remains robust. Valuations, while they're, we can see some differentials in valuations across the globe.
Such as S&P's going to records.
Yeah, exactly. The S&P is going to record highs. So, definitely there are people putting money into equities at the moment. Equally, from fixed income side, obviously we've seen rates remain lower for longer. Investors have, therefore continued to remain confident in fixed income, even when they're trying to find higher yields. And you have to remember that in that case as well, there's a lot of structural reasons why people will remain supportive of fixed income. And that's what we saw at the start of the year, I think. When you say 2013 was a great rotation, or we thought was going to be the great rotation into equities, 2014 actually saw the trend go the other way, as you said. Also, I think that's because a lot of institutional investors had recognized that they had made good money out of equities in 2013. It was the point in the year where they wanted to rebalance. So maybe they were taking profits and they were trying to get back to where their strategic benchmarks were telling them to get to. So, I don't think I don't think it's a zero-sum game between the two asset classes. I think there's strong trends, particularly in terms of liability matching, particularly in the need for stable income, which will remain supportive for fixed income also.
Okay. Could you explain that more about the global economy prospects, which is Japan is putting a lot of effort into the boosting economy, and the BOJ is actually pulling out a lot of money into the market more and more. And on the contrary, the U.S. is going to start lifting rate in some time, maybe around next year. That's what market expected. So, and Korea is still searching through the paths which it has to go between the two big economies diverging their policies. So, what is your prospect about the U.S., Japan, and China, maybe, and Eurozone economy?
Well, I think first of all, to take the U.S. Clearly, I mean, the U.S. has been on a slow path to recovery now for a number of years. They acted very quickly to stabilize their financial system back in 2008, 2009. And their households have sort of repaid their debts to a certain level. They've repaired their household balance sheets, shall we say. So the outlook for the U.S. economy in itself, I think, as a domestic economy, is reasonably promising at this point in time. And you can see that somewhat reflected in the stock market. And you can also, you can see a number of trends which I think, we've been saying this for most of the year, will be, I think, supportive for the U.S. on a medium-term basis. The whole shale revolution for instance, and the fact that, for instance, this year, for the first time in a long time, America has been a net exporter of energy. So I think there's good sort of medium-term structural support for the U.S.
Okay.
Moving on to, you mentioned Japan.
Yeah, Japan.
Well, Japan obviously is it's a well-told story for the past couple of decades. And this is probably the last couple of years since Prime Minister Abe came in almost 2 years ago to the day, and started to look at how he wanted to restructure the Japanese economy and stimulate the Japanese economy. Clearly there's been a lot of excitement around that. Some of that has waned this year due to consumption tax and the reaction to that, which I think was probably expected. But what we see with Governor Kuroda and his policies, obviously, is the will to do whatever it takes, to quote another central bank governor. Right. And so, as you say, the BOJ is being quite aggressive in terms of the monetary policy stance it's taking over quantitative easing. That should, we believe, have the effects that it's promising to have around, being clearly an inflationary stimulus to the Japanese economy, and importantly, weakening the yen. One of the parts of Abenomics that has to be gotten right first and foremost is to get Japan's export machine running again.
But that was the reflection of that was the response to the weakening economy.
Yeah.
Which was contrary to the expectation that it will go up instead of down. Yeah. So if the BOJ is putting more money into the economy, then you still believe that the Japanese economy is promising, and then it's gonna recover from deflation.
No, I said it. I think that the policy will have impact over time. I wouldn't say that the Japanese economy is in a strong place as yet, clearly, particularly given last week's data. So this is very much part of the recovery plan. I don't think we're at a stage where we can say that Japan is where it wants to be yet. But obviously, the QE, the quantitative easing policy, is one clear, shall we say, arrow that Abe has been using. Yeah. Korea. I mean, I think the Korean economy is still in a pretty attractive place from an outsider's point of view, and I can come on to talk about this a bit further. But I think the stock market is still relatively attractive. Okay. American growth, U.S. An improvement in the U.S. economy is clearly good for a large exporter of sophisticated goods such as Korea. Equally, obviously, I expect that the BOK has one eye on the BOJ, right? And to ensure that the won remains competitive versus the yen in such a situation. But so I can imagine that probably the won will drift down with the yen and not try and strengthen versus the dollar.
Okay. And do you think that trend will go on with the yen and won?
Well, I think that would make sense for Korea's economy. Okay.
Yeah. Okay. And could you also briefly talk about China and Eurozone too? Sure.
So firstly with China, clearly we are seeing a slowing economy, but I think that's very much in the plan. The president of China, Mr. Xi, has come to power on a mandate of reform. Right. It's clear that those reforms are being driven through in terms of the way he's tackling corruption. And part of that, there's a clear, I think, understanding that they need to move the economy from a investment-based economy to a more consumer-based economy. Right. And this is what we're seeing. We're seeing that slowing is a necessary outcome of that. At the same time, I think from a market standpoint, there's a lot that we can see is very promising in China. The stock markets are good value. They are, for most of last year, they were incredibly cheap. And we are seeing more interest coming through. And the Hong Kong Shanghai Connect, the through train, as it's called, is going to give international investors unprecedented access to Chinese shares. So that again is a very very promising stance for investors looking at China. Europe is maybe a trickier one. I think mainly the mood is pretty gloomy. Overall, we're still seeing the same issues that we were seeing a few years ago around the periphery in terms of levels of debt, in terms of youth unemployment, and general sort of structural inefficiencies within the Eurozone. There's a few bright spots. My own home country of Ireland has done very well in recent months, and has recovered. But overall, it's still a pretty sluggish growth pattern. Again, here, I think it's a combination of further stimulus, further ways in which the monetary authorities and Mr. Draghi can look to stimulate the European economy. Equally, there's probably some structural, some restructuring, some structural pain that has to be undertaken as well, I think, to get Europe back to where it was. But, recently, over the past few days, we saw pretty surprising, unexpectedly good data coming out of both Germany and France.
Yeah, Germany got off.
And, Germany's the engine in many ways of the Eurozone. And it was probably the bit we were, I think, at the margin most worried about over the past few months. So, I think there's still, whilst I don't think it's a one-way story. I think particularly, you're going to see periods, I think, over the next year where Europe maybe surprises to the upside. And if things get worse, then we can expect more stimulus. So again, it's certainly not a wasteland for investors. Far from it. It's still an interesting market in many ways.
Can you pick any biggest risk to Korea, maybe? Korean economy, which you just mentioned about volatility in global markets and geopolitical risks. And is there any specific risks to Korea? Which is, there are a lot of economic situations going on, which is in Japan and maybe in the US, they're diverging. And compared to the other economies, Korea is doing well in numbers. That's what global investors say. But from insiders' view, they don't think that it's not going so well. Do you agree with that?
Well, I'm not an insider. I'm an outsider by definition. And I think, as I said earlier, I could see the current situation with the US economy and the Japanese economy. I can see opportunities there for Korea as much as threats. I think particularly, your observations on Korea and how it looks from the outside. I think people understand that Korea is a highly developed economy. It's got a very skilled workforce. And it's part of a global supply chain where it's in a good place in that global supply chain. So when we compare it to other markets around the region, when we compare it to other markets in its broader benchmark, you're getting a developed economy. Maybe with, you are getting a developed economy, definitely, but an economy that's in the MSCI Emerging Markets Index, and therefore maybe we might assume a discount there versus developed, but you're getting the benefits of developed economy. So, I think, to foreign investors, Korea actually still looks pretty attractive.
Okay, and let me go on to the next question. Could you tell us about the investment strategy to emerging markets, and including South Korea?
I think our view on emerging markets all year has pretty much been you need to look at emerging markets on an individual country level, and you also need to look at them on a currency level as well.
Currency?
Yeah, because they're two different decisions in many cases. And whilst it's always not possible to hedge emerging market currencies on an individual level, you should at least be informed as to, how your country decision will be impacted by the currency as well. So at the start of the year, we basically took the view that the countries that had the best external debt profiles, the best current account balances would probably be the most successful. What we saw during 2014 was actually many of the countries that were maybe more vulnerable to external shocks, the likes of Indonesia, the likes of Turkey, actually worked pretty hard to, get their policies in place and sort of defend any particular downdraft from foreign investors pulling out of those. And this is on the back, obviously, of May 2013 and Ben Bernanke's taper talk, as we call it, which was sort of a mini shock for emerging markets when investors withdrew funds and brought them back into US dollars. On that basis, we've been reasonably, I think, surprised.
Yeah, that's surprising.
Yeah, in some areas in emerging markets. What we have noticed, I think, particularly, is that at the moment, those who have strong structural policies in place, those who have strong leadership in place, and I'm thinking particularly China and India, are starting to really quite rapidly regain investor confidence.
Okay.
So that's definitely the 2015 and more forward-looking view from here. As I mentioned before, I don't really see the Republic of Korea as an emerging market per se. I think in terms of the types of companies in the market, I think in terms of the types of products that you're offering and where you are in the global supply chain, by all extents and purposes, Korea is a developed market. But clearly, emerging markets over the past year have traded at something of a discount to developed markets. So therefore, I think anyone buying Korea or some of the other emerging markets that I've mentioned, I think who are on a good path to structural reform and have good policies in place, will be well rewarded over the medium term.
Okay, the last question on the paper. The Korean government has been trying really hard to boost the economy as like any other countries in the world. And there has been policy packages, and these are called the Choinomics, which combines the name of the finance minister and the economics. Do you think that the policy packages has been having positive effects so far? And what is your perspective for the Korean economy, if it's going to be actually boosted or if it's going to be successful by the policy packages?
Well, again, I think, anyone from outside Korea who's investing in the economy, I think likes to sort of try and find domestic-oriented opportunities within the economy. So again, we're reasonably optimistic on these sort of stimulus packages, as you say. I think the key for the Korean economy overall, I think, as much as anything else, is determined by its economic relationship with the US, with China, with Japan. And so if we're in a situation where the US economy is strengthening, right, where China is maybe slowing a little, but is still relatively stable in terms of its growth, still providing strong growth. And in a situation where the Japanese economy is seeking to reflate and revive itself, then that's a very good place to be. Korea should be a very good place to be, I think, in the medium term.
Okay, we are done with the interview now, so could you say goodbye to our audiences?
Well, it's been very nice to meet you and be interviewed by you. Thank you very much on behalf of BlackRock and myself. I hope you enjoyed the interview.
Okay, thank you very much.